Mike Santoli's here at Post 9. Talk more about what investors are watching as the algos at least have responded to this one yet again.
Without a doubt. I mean, the market has been very firm in the last couple of weeks. We had that little pullback, but during the last few days, I've been talking about how there's been a lot of hedging. The trade seems to be, look, stay long stocks into year end because everything else is working in their favor. But we have this one identifiable potential catalyst that could go either way. Let's hedge in front of it. So you had this kind of juiced volatility index because people were buying downside protection. Well, this one tweet kind of like knocked a lot of that loose. And so you released to the upside. I think the overall story is if the two big rules, and Ned Davis always talks about don't fight the Fed and don't fight the tape, both the Fed and the tape are friendly at the moment, at least in terms of how those trends are looking. I obviously think it matters if you do get the deferral or lifting of the December 15th tariffs, but it matters for the next couple of percent. It doesn't necessarily matter as much for where the market's going to end up.
Meanwhile, there's plenty of other macro to consider.
Yes.
Lagarde with these curious comments about the effectiveness of negative rates.
Yeah.
Our own jobless claims up to 252. Sort of strange as we wrestle with seasonality and calendar factors.
It is strange, and I think that's why I'm deferring to the market, saying there's stuff we care about and there's stuff we don't. And the big picture, given what Jay Powell said yesterday, and given the fact that I think that the big key for the trade decision is if you get those tariffs put off or set aside, it enables everybody to just expect macro to get better. And you don't actually have to prove that because you can sort of say, hey, we just got rid of the tariffs. Let's wait for the confidence channel to work its way through. Whether that happens or not, people can believe it for a while. So that's why I think psychologically and in a tactical way, the tariff thing matters. But look, the market, the fact that we're willing to rally on this stuff,
yeah,
and we don't
we're
even
rallying
know.
to highs, Mike, as you know, and people have been seeing it at the bottom of the screen, but we should say Dow Jones is reporting that the negotiators do offer to cancel the tariffs that would go in place on Sunday. Also offering to cut existing tariff rates by up to 50% on the $360 billion of Chinese imports that are already under tariff. Dow Jones going on to say they would reimpose the original tariff level if China fails to carry out pledges. And apparently this offer has been made in recent days as both sides are close or seeking a trade deal. And we want firm commitments from the Chinese on their purchase of U.S. products. So the S&P's moved to, I think, a new high. You can see it right there, up almost 1%.
Right, so that's probably even a little bit more than coming into today we thought we might get. If, in fact, in exchange for what, I guess, is the question, but...
Well, it's not just as you said, not just December 15th cancellation, but 50%
off the 360 billion,
which is what Bloomberg had reported earlier in the week, right? The possibility that maybe you bring everything down by half.
Yeah. If, in fact, China meets whatever the commitment is, I assume. I've always viewed this issue as much more about a nuisance and a fight that the market didn't want, and they want it just finished. And as I said, if you roll back those tariffs, then all of a sudden you get another, little thing that next year can look better than this year, on a comparable basis.